Hello traders and welcome to the weekend edition. Good through Sunday, January 29, 2012. My name's Dez, here at Grok Trade, Senior Analyst and your future trading mentor. And we're going to hit the ground running here, the S&P. We've just been on a tear, going straight up, all is well. Got caught up on a major trend line here, and what's interesting on the daily chart is we have pulled back. The question is, can we blast through here, or will we start drifting downward? Now, statistically speaking, we have a better chance of a drifting downward taking place here, and we do have a line here. It's pretty light to see, but we have support and support. It's a little gray line that comes up here. If we did drift down, I could see that as being a support area, and then rally, and then finally break through. On a weekly chart, two major trend lines. We are in a monster symmetrical triangle. We're waiting for a significant move one direction or the other. We have a nice little pop to the upside. The issue now is we dojied out for the week after an up leg at a major resistance line. This is a telltale sign of a reversal being imminent and a drop getting ready to ensue. The big number to watch going into this next week would be 1306. If we go lower than 1306, watch out. What's interesting is I pulled another trend line here from this swing low in August 2010. It's a pink line, it's kind of light here, all the way up to about September 2011. You'll see that that was a resistance point. What's interesting here is this is parallel with this major trend line. So these two are fairly parallel, and we're at a resistance point. So again, the S&P is very extended at a major resistance point on the weekly. And again, on the daily, major resistance point. Now let's take a look here at the monthly. Monthly chart, major resistance, we're at major resistance. So far as the S&P is concerned, we just could not be at more major resistance than what we're at right now. So this would be the time to actually be looking for short positions if we start to drop. On the other hand, if the markets are going to break out, it should happen anytime now. This is a crucial week that we're going into, and we'll want to be watching this like a hawk. Let's look at the NASDAQ. Start here on the daily chart on the NASDAQ. Big run, we blasted through major resistance. So if we are looking at the NASDAQ as a leading indicator, then this indice or this index is saying that the market still have a lot of steam left in it, and we could start breaking through, because that we've already busted through a resistance area on the NASDAQ. So the theory is we should do the same on the S&P and Dow. If you look here on the weekly chart, we're in a big rising wedge, which is more bearish than it is bullish. But we have a lot of upside here to be able to, a week or two of upside before we hit that major resistance. And then here on the monthly chart, if you go way back, I mean, this monthly chart is back here in 2000 to here. Actually, I need to adjust this line to the top of that. Okay, that's good. I mean, we busted major resistance on the monthly NASDAQ. Not too shabby. If you take a line from this swing low, see this pink line? This swing low, come up, resistance. Now we're at that resistance point. So even though we've broken major resistance, we're at another minor resistance line. Let's take a look here at the banks, the financials. This is the daily. The daily is in a monster rising wedge. However, the daily is also in a big high base, and we're remaining above the 20-day moving average. We need to pop to stay bullish, but here's the number you want to write down. 1749. We need to get above and stay above 1749. That is the number. Watch that. On the weekly chart, Big symmetrical triangle. Look at these big chunky lines. Boom, busted through on the weekly chart. That bodes well for the markets as a whole. I have this line drawn, swing low to swing low. I copied this line, dropped it right here, and that's precisely where we're at resistance. So we are poised to drop back down to this lower trend line on the weekly chart. On the monthly chart, we popped major resistance and above the 20-month moving average. So the monthly is saying that we have a lot of upside potential set up, even though the weekly is saying that, you know, we're in for a short-term correction, and the daily that we're looking at is in a rising wedge. So if we do get that short-term correction, it could actually last a little longer than expected. I want to look here at the VIX. If you look at the VIX is very, very low right now. We're below 20. We're at 1854. That is a very low point on the weekly chart. Wow. You know, we pull back, and then the markets fall out of bed. We pull back, the markets fall out of bed. We pull back. I mean, we're way pulled back right now. Then on the monthly chart, pull back, pop, pull back, pop, pull back. So be watching for market volatility to come in, which would corroborate what we're seeing on the S&P and the NASDAQ and some others at being at some resistance points. Gold. Let's go to the daily gold. Man, we broke that down out of the symmetrical triangle. We go into an inverted head and shoulders. We rally high, busting through major trend lines and all major moving averages. Wouldn't it have been grand to have gotten in gold down here on that falling wedge that we were talking about for the last few weeks? That has been on a tear. The weekly chart, what's interesting is we have a monster bull flag, and we have broke over the top of this bull flag. Gold is certainly looking like a significant buy. And then check this out, the monthly chart, where I thought we were getting ready to break down and bust a huge support line. Instead, that support line holds. We're rallying back north. So this GLD, next stop would be knocking at the door around 200. So something to be watching. You know what? Let's also take a look at SLV. Nice, which is a bull flag here. It's starting to make a move. Hasn't broke out yet. This is a monthly chart. Now let's go to a weekly chart. The weekly chart, kind of a big bull flag that hasn't broke out yet, but did this falling wedge that has broke out. Looking very, very nice. A bullish divergence here on the MACD centered oscillator. Yeah, looking nice. And on the daily chart on silver, it's had a nice run. It's coming up to resistance right now, this area. And we're right there at it. Crude oil, we have a rising wedge. If we break down, crude oil could be in trouble. So watch that. We need to pop up and above for this to stay bullish on the weekly chart. This is kind of a high base. We're staying above the weekly moving averages, so this could get bullish yet. And then the monthly chart, choppy sideways. That's all that's taking place right now. I'm really watching this 4140. This would be the area of resistance that we need to get over. And then the US dollar, big rising wedge. We come breaking down, blasting through the 20 and the 50, the 100 day moving averages. And the US dollar is dropping pretty good and on some volume, which is helping out the markets. And on the weekly chart, we have support and support, and then we have resistance and resistance, and we're just dropping. And we're doing so again on volume. So the markets, or the US dollar, could still sustain some droppage here. And then on the monthly chart, huge falling wedge. And we just popped up, finding resistance at the 20-month moving average. And I would be sincerely appreciative if you share this video with your trading colleagues. Thank you. If you haven't done so yet, go to facebook.com/Grok Trade and join the group here. All you have to do is click the like button. Alright, appreciate it, gang. Talk to you tomorrow.